Nigeria, Ghana, Kenya, and the United States are holding their rate decisions meeting this week. But just before we came on air, Ghana's central bank has left its policy rate unchanged at 17%. Meantime, North Africa, Libya is resuming 3,000 barrels per day oil production at the abandoned well in Mesla. And the world's largest gold company may just be on the way as Barrick Gold and Rand Gold Resources agreed to an $18 billion deal. Thank you, everyone, for joining us. This is Your Business Incorporated. I am boasting them of this Monday. Let's hit the market straight, starting from home country here in Nigeria, where the main index at the stock exchange appears to be taking a nosedive in today. That's about 0.3%. You see on your TV screen. Still holding it, however, above the 32,000 level. In South Africa, the GSC index, Ocean Index, is up about 1.09%, looking like the best performer on the continent since the morning, while the Egyptian index is down about 0.5%. The Kenyan market is set to resume today, but trading closed 2.4% negative on Friday. Let's move on to the Middle East, where it's looking like a bloody Monday. Markets there, the GCC region, were in negative territory, with the exception of Saudi Arabia, where the Tadawul is 0.5% higher around midday Nigerian time. All the other indices were negative, with the Qatar market making biggest hit, about 0.38%. You can see Abu Dhabi and the Dubai financial markets all in the negative territory. And the European stocks were mostly lower today. Investors are bracing for the ramifications of another round of tariffs between the world's two major economies, United States and China. Let's see what is making the rounds across the markets and the economy this Monday. We're hooking up with Paul Christian Breeze. He's a DWTV market correspondent for Channels Television, live to us from the Frankfurt Stock Exchange. Paul, it's good to see you. Let's get started with the big story from in U.S. this week, the FOMC meeting. How much of the trade fight between Beijing and Washington and the emerging market sell-off we've seen over the last months, how much of this do you expect to see reflect in the FOMC decisions and guidance on Wednesday?
Well, the Federal Open Market Committee, the branch of the U.S. Fed that decides on monetary policy, of course focuses on national issues much more than on international issues. And the American economy seems to say, trade conflict? What trade conflict? The economy is actually booming in the U.S. Unemployment is at a very low currently. The only sector that seems to get hit by this ongoing conflict is manufacturing, which of course the Fed will be monitoring. But for now, it's very likely it's going to try to contain inflation, to prevent inflation from rising up too fast. It's at 2%, just where the Fed wants it. And so it's widely expected that it's going for its third rate hike at its meeting in Wednesday. The look actually is now on the markets at what is going to come next, when is it going to end, and how fast are rates going to rise. General consensus seems to be that at about 3%, the limit will be hit. Of course, all of that goes against Trump's wishes. Donald Trump, the U.S. president, who would like the interest rates to be very, very low. And it's going to hit emerging markets once again as it becomes more difficult and more expensive to refinance dollar debt.
So if Jerome Powell focuses on the United States for the FOMC decisions and his team, what about the trade war between Washington and Beijing? We're now in round 2. So is it likely, Paul, that both sides could sit down to a talk, or who blinks first here as everyone tried to take sides and the trade fight keep going?
Well, right now, it doesn't seem like anyone is ready to blink or wants to blink. There's no willingness on either side to make amends or take a step towards the other, although that may be what it takes to solve this problem. China has actually even canceled mid-level talks, as well as a visit of Vice Premier Li Hui in Washington this week. No positive signs. And as long as there aren't any incentives for Beijing Beijing analysts say it's very unlikely it's going to return to the negotiating table. One glimmer of hope might be U.S. midterm elections, which are happening on November 6th. For two reasons. One is Democrats may actually win a bit more power, and the Chinese might be looking for a little bit of a more positive trade environment there. The other is that, of course, midterm elections are important for Donald Trump, and he wants to put pressure or show strength before that. Generally, a dollar for dollar tit for tat hitting back is not going to be possible for China, as China exports much more to the U.S. as vice versa. But China would have other measures to hurt the U.S., what it calls qualitative measures, making business for American companies in China much more difficult than it is right now.
Yes, very interesting time ahead on this round two. Let's wait whether we'll see round three. But again, we have a very busy week, of course, all the time when the month's coming to an end at the end of the third quarter. What other big headlines are on your radar this week, Daniel?
There are a lot of news. This week, it's a packed week. After Friday, of course, the eyes are on Theresa May. When she said on Friday that negotiations with the EU about a Brexit had hit an impasse, now people are looking for her to provide an alternative. So how is it going to work out? There's talk of a possible snap election. So that's definitely, negative in those negotiations, and we may see something come up this week. Another area we're looking at is the Italian government, which is supposed to bring out its debt targets or a budget target this week, debt growth and deficit, which is going to impact the bond market. It seems that an average of about 2 to 2.5% deficit of the GDP is what a market would tolerate. And finally, we may see informal NAFTA talks at the UN General Assembly this week, continuing talks between Canada, the US, and Mexico possibly. So we'll have an eye out for that.
Thank you so much. Paul, Christian Breeze, thank you very much for coming through from Frankfurt. We have the rest of the week together. We appreciate that from Frankfurt Store.